Has been a wild ride for British insurer Prudential Plc this year. Shareholders balked at its $25 billion purchase of AIG's Asian unit, but this morning the company beat earnings expectations. CEO Tidjane Thiam is in London with our own Andrea Catherwood. Andrea, take it away.
Thank you very much indeed, Eric. Welcome to Bloomberg this morning. Your shareholders got a little bit of a present today with better earnings than expected and also a dividend rise.
That's right.
What kind of relationship do you now have with those shareholders? Are you rebuilding confidence with them?
Well, the shareholders are, of course, very, very important to us. And personally, as CEO, I'm simply a servant of the shareholders. I'm there for their benefit and to work for them. So I was particularly pleased that we delivered such strong results. And we have a very active dialogue with them. Of course, there is always a range of views when you think about shareholders. It's a large and diverse community. But overall, I would expect that they would be pleased with these results.
Now, they may be pleased with the results. You say that you're a servant of the shareholders, but you also surely need the freedom to do what you want. Did you feel that you had your wings clipped too much with the AIA bid? Is it going to be hard for you going forward?
Well, it's a balance. It's like everything in life. I think we attempted something very, very daring, it's fair to say. It didn't work out in the end, but the reality is, especially in the later phases of that project, the shareholders were very involved. For instance, when we renegotiated the price with the CEO of AIG and found an agreement, the shareholders were involved, expressed their support, so that fundamentally they have a good understanding of what happened. And I think that going forward, it's a bit of a paradox, because we've always had a very strong organic growth strategy, and there was only one company in the world we were ever going to look at, and it was AIA, and it happened very early in my tenure. We went after it. No regrets. I mean, it was absolutely the right thing to do from a strategic perspective, from a business perspective. That was the right thing to do. It didn't happen. It didn't happen. We now move on. We're back.
And you'll never try again for AIA?
Well, people always say never, but this is one case where, at least personally, I say never. Yes.
Okay. Now, you did say that it's a paradox, because you're talking about organic growth in Asia. Asia is where those great figures came from.
Absolutely.
How do you grow organically? Clearly, your plan A, your personal plan A, was actually to buy a big company, and you're not going to do that anymore.
No, my plan A was to grow organically in Asia very strongly. All that AIA would have allowed us to do is to do that faster. That's why we keep using this word acceleration. It was not a change of strategy. Strategy is to be a dominant player in the Asian market. We would have gotten there even faster, because we believe that the asset was undermanaged and that we are much better at insurance than that company, and we would have then taken that franchise and built it up. And I think our numbers, 36% growth in Asia in this half year, shows that we are good at insurance.
So will you buy other smaller companies now? What will your strategy be?
We always have had small acquisitions. You probably saw that in January we made a deal with UOB, and that's doing extremely well. In 5 months, we set it up in 4 weeks, and in 5 months the performance has been phenomenal. You saw we grew by 59% in Thailand in the first half. It's largely thanks to that agreement. Singapore, Malaysia, and it was £300 million. So those types of transactions are part of our strategy.
No, there has been a slight change, because, of course, your old boss, Mark Tucker, is now in Asia. Is that going to make the playing field a little bit more difficult for you?
We wish him well, but the central issue in Asia is the under-penetration of those markets. On average, penetration is between 1% and 2%, which means 98 to 99% of people don't have the product. So you don't bump into the competition. The biggest constraint to our growth is our ability to find enough people to sell our products. It's really finding the right people to hire and then to sell our products. But growth, I mean, we grew in excess of 40% in almost all our markets this half year, 40%, and we're the largest company, and we're still growing at 40 to 50%, which is phenomenal.
Do you see you and your chairman still being there in a year's time?
Still there in a year's time?
Yep.
Look, we will serve as long as the shareholders support us and are happy for us to continue.
Tidjane Thiam of Prudential, thank you very much indeed for joining us.